Hello everyone, welcome back to my YouTube channel. In today's update, we are going to take a careful and disciplined look at the latest discussions surrounding the potential revaluation of both the Vietnamese Dong and the Iraqi Dinar exchange rates. This topic has been circulating widely across online platforms, attracting attention from global currency watchers, retail investors, and economic observers. However, as always, our goal here is to move beyond speculation and focus on what is actually supported by economic fundamentals, policy signals, and real-world financial conditions. Let's begin by setting the context. Conversations about currency revaluation often emerge when a country is experiencing structural economic changes, rising foreign reserves, improved trade balances, or policy reforms. In the case of Iraq, the dinar has long been a subject of global interest due to the country's oil wealth, ongoing reconstruction efforts, and its evolving monetary policy framework. Similarly, Vietnam has been gaining recognition as a rapidly growing export-driven economy with increasing integration into global trade systems. Now, when we talk about revaluation, it's important to understand what that actually means in technical terms. A currency revaluation is typically a deliberate upward adjustment in the value of a country's currency relative to others, usually under a fixed or managed exchange rate system. This is not something that happens overnight without policy backing. It requires strong macroeconomic stability, controlled inflation, consistent GDP growth, and most importantly, confidence from both domestic and international financial institutions. Focusing first on Iraq, the Central Bank of Iraq has maintained a relatively stable exchange rate policy in recent years, with the dinar largely pegged to the US dollar through a managed system. While there have been adjustments in the official rate, most notably during fiscal pressures, there has been no verified announcement from credible institutions indicating a sudden or large-scale revaluation of the Iraqi dinar. What we are seeing instead is a gradual effort by Iraqi authorities to strengthen the financial system. This includes improving compliance with international banking standards, increasing transparency in foreign currency auctions, and working to stabilize inflation. These are important steps, but they are part of a long-term economic reform process rather than immediate triggers for a sharp currency revaluation. From a short-term perspective, the Iraqi dinar is likely to remain relatively stable within its current policy framework. The government continues to rely heavily on oil revenues, which means that global oil prices play a significant role in determining fiscal strength. When oil prices are high, Iraq's foreign reserves improve, providing support for the currency. However, this does not automatically translate into a revaluation. Instead, it strengthens the country's ability to maintain its current exchange rate and manage liquidity. In the long term, the outlook becomes more nuanced. If Iraq successfully diversifies its economy beyond oil, strengthens its private sector, reduces corruption, and builds stronger institutional frameworks, then we could see a gradual appreciation of the dinar over time. But this would likely occur in a controlled and incremental manner, not as a sudden overnight shift. Now let's turn our attention to Vietnam and the Vietnamese Dong. Vietnam has been one of the fastest growing economies in Asia, driven by strong exports, manufacturing expansion, and foreign direct investment. The country has positioned itself as a key player in global supply chains, especially as companies diversify away from overdependence on a single manufacturing hub. Despite this growth, the Vietnamese Dong has historically been managed carefully by the State Bank of Vietnam. The central bank uses a controlled exchange rate mechanism to ensure export competitiveness. A stronger currency can make exports more expensive, which could impact Vietnam's economic model. Therefore, policymakers tend to avoid sharp appreciation unless it is supported by broader economic stability and strategic objectives. Recent discussions about a potential revaluation of the Vietnamese Dong appear to be largely speculative. While Vietnam's economic indicators are strong, such as steady GDP growth, rising exports, and increasing foreign reserves, there has been no official confirmation of a major revaluation policy. Instead, the central bank continues to adjust the currency gradually within a controlled band, ensuring stability while responding to global market conditions. From a short-term standpoint, the Vietnamese Dong is expected to remain relatively stable, with minor adjustments based on inflation, trade balances, and global currency movements. The central bank's priority remains maintaining export competitiveness and controlling inflation, rather than implementing a sudden revaluation. Looking at the long-term picture, Vietnam's continued economic growth could support gradual currency strengthening. As the country moves up the value chain in manufacturing and increases domestic consumption, there may be room for a stronger currency. However, this would likely be a slow and managed process, aligned with broader economic goals rather than speculative expectations. Now, bringing both currencies into a comparative perspective, it's important to recognize that Iraq and Vietnam are at different stages of economic development and operate under different monetary frameworks. Iraq's economy is heavily resource-dependent, while Vietnam's is export-driven and diversified across manufacturing sectors. These structural differences mean that their currency trajectories will not follow the same path. For Iraqi Dinar followers, the key takeaway is that while economic reforms are ongoing and positive steps are being taken, there is no credible evidence supporting an imminent large-scale revaluation. The focus should remain on monitoring policy changes, central bank actions, and macroeconomic indicators rather than relying on unverified claims. Similarly, for those watching the Vietnamese Dong, the story is one of steady growth and controlled monetary management. The potential for long-term appreciation exists, but it is tied to sustained economic performance and policy decisions rather than sudden announcements. It is also worth addressing why these revaluation narratives gain so much attention. In many cases, they are driven by misunderstandings of how currency markets operate. Exchange rates are influenced by a complex mix of factors, including interest rates, inflation, trade balances, political stability, and global investor sentiment. Any significant change in currency value requires alignment across these factors, along with clear policy direction from central banks. Another factor is the appeal of high return expectations. The idea of a currency suddenly increasing in value can be attractive, but it is essential to approach such claims with caution. Financial markets do not operate on guarantees, and responsible analysis requires separating verified information from speculation. In the current global environment, both Iraq and Vietnam are navigating external challenges such as fluctuating commodity prices, shifting trade dynamics, and global monetary tightening. These factors further reinforce the need for cautious and measured currency policies rather than abrupt changes. For investors and followers, the most practical approach is to stay informed through credible sources, understand the underlying economic fundamentals, and avoid making decisions based on rumors or unverified news. Currency movements, especially in emerging markets, tend to be gradual and policy-driven rather than sudden and dramatic. As we continue to monitor developments, key indicators to watch include central bank announcements, foreign reserve levels, inflation trends, and fiscal policies. In Iraq's case, progress in economic diversification and financial sector reform will be particularly important. For Vietnam, export performance, foreign investment inflows, and monetary policy adjustments will provide valuable insights. In conclusion, while the idea of a revaluation of the Iraqi Dinar and Vietnamese Dong continues to generate interest, the current evidence points towards stability and gradual evolution rather than immediate transformation. Both countries are making progress in their respective economic journeys, but currency appreciation, if it occurs, will likely be a result of sustained long-term development rather than sudden policy shifts. As always, staying grounded in facts and maintaining a balanced perspective is essential when analyzing currency markets. This helps not only in understanding the bigger picture, but also in making informed and responsible decisions. Thank you for watching. If you want to stay updated with factual and responsible analysis on the Iraqi Dinar and global currency developments, make sure to subscribe to the channel. And remember, this content is for informational purposes only and should not be considered financial advice.